I'm Priscilla Barrera with the Investing News Network, and here with me today is Joe Mazumdar of Exploration Insights. Joe, thank you so much for joining us again.
Thanks for having me.
All right, so we're here at Sprott. We're in the middle of the year. We've seen gold prices increase quite a bit. Are you finding investor optimism is returning to the sector?
Yes, I mean, in terms of the retail sector, there's definitely a lot of optimism, and that optimism is reflected in the amount of financings we've seen in the last several weeks, especially in the gold and even in the silver space, because as the gold and silver ratio has fallen a bit and silver has picked up, many in equity financings and interest has gone to silver as well. So yes, we are in the summer when it's usually May go away with a lot of optimism, yes.
All right, so let's talk a little bit about the exploration companies. Has this increase in gold prices impacted exploration companies and juniors?
Oh, absolutely, absolutely. So many exploration companies, and we've talked about this before, that there's like 900 juniors listed on the venture exchange that are mining related. And during most of the year, they had trouble financing. And so alternative investing, like whether it was companies or royalty companies or streaming companies, basically had their way. They could do anything that they want because there was just a paucity of financing. Over the last 3 to 4 weeks, we've seen a turnaround where we've seen like 500 million-ish Canadian financing, equity financing done. And that's just happened really quickly. And so people are taking advantage of this recent spurt, even though it's the summer, to refund themselves, recapitalize themselves, and because these are non-cash flowing companies, most of them.
All right. And in terms of your own investments or the investments you do at Exploration Insights, how does a price uptick really impact those decisions? Is prices a factor that investors should constantly pay attention to?
Well, it depends on the investment thesis. So we had an investment thesis, and you can be so early that you're wrong, as Rick Rule says. We started doing this at the beginning of the year, and we invested in a few companies that we thought had leveraged the gold price. The gold price really didn't move significantly until recently, over the last month or so. So with that happening, those companies started going up because they have a very high beta to gold. And so if your investment thesis is a beta to gold, you should probably look for those kind of companies. And usually they tend to be producing companies, and they tend to be marginal producers. So we invest in a company like IAMGOLD, which has a very high beta to gold. That's one. On the silver side, we've invested in Pan American Silver with respect to beta to silver price. Those are near-term trades. They're not long-term investment thesis, except for Pan American, which also we're looking for a restart of the Escobal project in Guatemala, which would be significant for that company as well.
All right, and I think the last time we spoke was PDAC, and one of the key topics or key trends was these mega mergers. Is that season over?
Well, there's less to merge on the mega side. So now what we're going to see is the consequences of the mega mergers and the commitments to divestitures to reduce the combined debt. We'll see that at Barrick, combined with Randgold. We'll definitely see that with Newmont and Goldcorp. And they've promised $1 billion and $1.5 billion of divestments. Pan American as well as looking at divesting its Ontario assets that it bought from Tahoe. So we're going to see a lot of those divestments over the next 6 to 12 months, or we're already seeing it. And so that's really going to put pressure on junior developers that are trying to bring a new asset into the market, because many companies will look at what the majors are offering on permitted, potentially operating assets already, and that will compete with the ones that are out there in terms of single asset junior developers.
All right, and moving then away from mega mergers, what do you expect will be the next key trend in the gold space?
Well, what we've seen is, M&A has happened prior to this move in gold, especially driven by the Australians coming over to North America, because I think on their side they're seeing a lot of geopolitical risk in a lot of the countries that they try to grow in, whether it's the Philippines or Indonesia or Papua New Guinea. And now they're trying to come into the Americas again. And they've done it before, but now it seems like more of a commitment. Companies like Newcrest, Oceana started it several years ago with their purchase of Hale, but now we see Northern Star coming up buying Pogo. We saw Santa Barbara buying Atlantic Gold. And so where the other companies were looking to divest and looking to sort out their balance sheets in North America because they hadn't been producing free cash flow. The ones in Australia are now hitting peaks of local Australian dollar gold well over $2,000. So they've been doing really well not only on the balance sheet but also on their equity. So they've been able to not only raise money but also produce free cash flow. And so they're in a better position to make acquisitions. And so they have been. And so going forward, we'll probably see more strategic placements by these companies as they look to basically look for more assets in terms of their exploration budgets to do. That should continue. But what we're really looking for at Exploration Insights is those quality projects that's more on the supply side situation where we don't see a lot of those quality assets actually coming into play. That's what we need to see going forward. And that's a long-term investment to find, and that's usually in exploration.
All right, so talking about quality assets, you travel a lot, you visit a lot of places. Has any particular geographical area caught your attention lately?
Yeah, strangely enough, several months ago I went to Japan, and Japan is obviously a G7 nation, one of the largest economies in the world. Doesn't have much of a mining industry. They changed the mining laws several years ago. A couple of companies have come in to try and take advantage of that, and these are mostly epithermal and porphyry-related deposits that we're interested in, and that's a country that we're looking at. We've invested in a company that's exploring their Japan Gold, not Japan Gold, but also Irving Resources. And so those are the companies that right now are levered to that, prospectivity in Japan, in a first world country, also with a lot of infrastructure.
All right, so we're in July. If you look back at your investments this year, which one has been your best investment so far?
One side we did well, and usually you can do well on exploration plays, and we had one Radius Gold that had a very low enterprise value, had decent working capital position, and hit some great intersections with their JV partner Pan American Silver in Mexico, and that stock has done well. Another one, because of the Australian dollar gold price going over 2,000, and a company that's coming into near-term production that owns 50% of an open pit gold asset that just finished its first Paul Gruyere with Goldfields. That one's done really well. And so one was very levered to Australia local price. The other one was an exploration play. Both did well, and both, interestingly, both in gold.
All right, my last question for you today, Joe, for the investors that are watching us today is the summer season. How should they approach this season right now?
I guess it depends on their investment thesis. If they're looking for exploration plays, keep your nose on the ground, ears open to any plays that might be finding something, on the brink of finding something that might be a lower quartile producer, regardless of commodity. So that's on the exploration side. The other side, if you're really keen on precious metals and like that leverage, I would suggest the producers, junior producers that are highly levered to the gold price, but have decent working capital positions so they won't go back to the markets, and have decent news flow coming up. So those are the things that you look for if you're keen on precious metals. But underlying it, exploration has not kept up, supplying lower quartile assets. So really we need to see that. And that's really one of our focuses.
All right, Joe, thank you so much for joining us today.
Okay, thank you, Priscilla.
Once again, I'm Priscilla Barrera with the Investing News Network, and here with me today was Joe Mazumdar of Exploration Insights.